Hello everyone, welcome to this second day of the Prepare to Pass webinar for the paper Advanced Performance Management. My name is Luqman Rafiq and I am the tutor for this paper Advanced Performance Management. We are going to continue from where we left yesterday. In our yesterday's session, I am going to quickly recall about what I discussed with you people in our yesterday's session. I've shared with you people this specific slide of yesterday session also in the WhatsApp group. But let me have a quick recall. Let me have a quick discussion of the things that we discussed yesterday. Okay, I hope that I am audible. And for those of you who are unable to hear, I would appreciate if you could please join with computer audio so that you can listen. You need to join with computer audio so that you can hear me. That is an important thing that everybody should actually consider. Now, okay, coming back to what we discussed in yesterday's session. As I told you people that we started off with this APM, the Advanced Performance Management yesterday. And what we did discuss in our yesterday's session was we talked about the concept of performance management. I discussed with you people what the performance management is all about. And then what I discussed was I told you people that if you have to understand what performance management is, what you need to do is that you need to think as if you are running a business. You need to think as if you are running a business. So when you are running a business, then what actually happens is that you need to look after every single aspect of the business, and the every single aspect of the business is being looked after just to make sure that the business operates properly, just to make sure that the business is going forward, the business is going in the right direction. So I told you people that this is what the performance management concept is all about. This is what the performance management concept is all about. Okay, so now then what I did was I discussed about this specific thing that I told you people that there is another concept which is called performance measurement. What exactly the performance measurement is? So we did discuss that when we talk about the concept of performance measurement, the performance measurement is part and parcel of management. What is performance measurement? The measurement is actually part and parcel of the management. That's what we did discuss in yesterday's session. And I told you people that when we talk about the measurement, so try to understand this thing, that measurement is something which is an important thing to keep in mind. Why? Because what gets measured gets done. That's a very important principle of the performance management. That's a very important principle of the performance management. Now, what I then did was I actually moved a bit forward and I discussed further. And I said that in order to understand the performance measurement, you need to understand the performance measurement hierarchy. What exactly do you mean by this performance measurement hierarchy? So I told you that any organization, what happens with respect to that organization is that organization operates in this specific manner. Like they've got a vision which sets the ultimate goal, ultimate objective of that organization. Then there is a mission which actually tells you how this vision is going to be achieved. Then there is this strategy, which is the course of action that the entity would adopt. Then there are these goals and objectives, which are the short-term goals, short-term things that need to be done. Then there comes a critical success factor, which is basically the things that you must excel at in order to achieve your goals, in order to achieve your targets. Then the KPIs. KPIs are simply the way of measuring the performance. Then I moved forward and I told you people that the KPIs could be of two types. What could be the two types of KPIs? The KPIs could be financial, KPIs could be non-financial. Now, what exactly do you mean by financial? What exactly do you mean by non-financial? So I told you people that the financial KPIs means that you are talking about financial statement of the entity. The financial KPIs mean that you are talking about the financial statement of the entity. And the non-financial KPIs, the non-financial performance indicators mean that you're not talking about financial statement, you're just actually, you are going around with this specific thing that you're basically measuring the performance with items other than financial statements. So when I talked about the financial statements, I told you people that the financial performance indicators could include the profitability, could include liquidity, could include the efficiency, could include the gearing, could include the investor ratios, etc., etc. And I did discuss the various formulas, the various types of these ratios also. Then what we did was we moved a bit forward, and then what we did discuss was we talked about the concept of the non-financial performance indicator. With respect to the non-financial performance indicators, I told you people that if you have to actually establish the non-financial performance indicators, then you would have to classify these non-financial performance indicators into something. And what we did discuss was that when we actually classified these non-financial performance indicator, so we classified the non-financial performance indicators into the various categories, which included the quality, the customers. At the same time, we talked about the market related non-financial performance indicators. We talked about the production related non-financial performance indicators and the learning and innovation. So we talked about these different non-financial performance indicators. Okay, then what we did discuss was we talked about the concept of these various types of performance indicators, and I told you that there are various models, and amongst the various models I did discuss about the models which included this balance scorecard, the building block model, and the performance pyramid. These were the major models that we did discuss about. And then what I did was I talked to you people about this specific thing, and I told you that the balance scorecard is actually one of those models that tells you that you have to measure the performance of the entity using the four perspectives, which includes the financial perspective, which includes the learning and growth perspective, which includes the internal business perspective and the customer perspective. Okay, then what I did discuss was I told you people about this specific concept that how exactly would you implement a balance scorecard in any organization. So this is how you implement the balance scorecard in any organization. How you define a perspective, and for the perspective you actually set out the objective for each of the perspective. What you do is that for each of the perspective, we've got a different objective. And once we have got this different objective, so what we do is that we introduce performance indicators for those objectives. What we do is that we introduce performance indicators for those objectives. And then at the same time within the organizations, the organization, what it does is it sets a certain target. What it does is it sets a certain target. So what you need to do is that you need to have the certain target that is also being set in order to specifically assess, in order to see how the performance of the entity is. So we discussed about all of this thing, and then what I did was I moved forward to the next model. And the next model that I talked about was basically I told you about the next model, which was majorly the performance, which was the building block model. Just wait a bit, please. Okay, so that was basically the building block model. And from the building block model's perspective, what I did was I told you people that what the building block model is. The building block model is actually one of those models that actually tells you that what you have to do is that you have to measure the entity's performance using these 6 dimensions of competitiveness, financial performance, quality of service, flexibility, resource utilization, and innovation. So I told you I did discuss about the various types of indicators that could be introduced in order to measure all of these, and we did discuss about them. And I told you that while measuring the performance, you have to make sure that you meet the standards of ownership, achievability, and the fairness, which is also going to be termed as equity. So what do you need to ensure? That you meet the standards of ownership, achievability, and the fairness, which is also going to be termed as equity. Now, then what we did discuss was we talked about the concept that the different measures need to be followed. Now, what are those different measures? The different measures of the rewards that needs to have the clarity, motivation, and should be based upon the controllable factors. Should be based upon the controllable factors. So we talked about all of them. And I told you people that this building block model was originally introduced for the service oriented organizations. And what was the reason to have a different type of model for the service oriented organization? That was because a service has got different characteristics as compared to the manufacturing organization. And what are those different characteristics? So when we talked about these different characteristics, so I told you people that the service has got this intangibility, heterogeneity, simultaneity, perishability, and the ownership concept. That these are the various things that actually exist with respect to the service organization. And on the basis of this, what actually happens is a service organization differs from the manufacturing organization. Therefore, what you need to have is you need to have a different type of performance measurement method for the service organization. Now, I discussed about this, then I moved forward and I talked about the performance pyramid. Okay, before I move forward in recalling the pyramid, I could answer that there is a student who is asking that can I join this session through WhatsApp link? No, WhatsApp link is just for the communication. My audio is not supporting from my phone. The audio must be supported. You just need to join with the audio, join with the phone audio. It runs on the phone. It should not be a problem. Okay, then I move forward and I discussed about the performance pyramid. And with respect to the performance pyramid, what I did was I told you people that the performance pyramid is one of those models that actually considers that every organization, what it does is it has got it needs to perform at different levels, whether that be the operational level, whether that be the tactical level, whether that be the strategic level. The organization has to perform at all levels in order for the organization to be able to achieve its ultimate vision. So if an organization has to achieve its ultimate vision, it has to make sure that it performs at all levels. What it has to do is that it has to make sure that it performs at all levels. That's what the organization has to do. Now, then what I did discuss was I moved a bit forward and I told you people that this is how things go about. That, for example, if you produce quality goods, you deliver those goods to the customers on time, so ultimately the customer satisfaction is going to enhance. And if the customer satisfaction is going to enhance, ultimately your market related objective of expanding, of penetrating, of capturing more market share is actually going to be fulfilled. Is going to be fulfilled. So what you need to do is that you need to introduce the measure at this quality, at the delivery level, at the customer satisfaction level, at the market level. You have to introduce the performance measures at these different levels in order to be able to understand them. Now, then we moved a bit forward and we talked about the cycle time. Now, what exactly do we mean by this cycle time? So cycle time is the time that is needed to complete any specific process that is considered to be cycle time. That is going to be considered to be cycle time. Then what we did discuss was we moved a bit forward and I told you people that cycle time needs to be reduced. The cycle times of the various processes need to be reduced. The waste that exists needs to be eliminated. The waste needs to be eliminated. So automatically what is going to happen is your productivity will enhance. And when your productivity will enhance, so ultimately what is going to happen is you will be able to achieve your financial objectives. And what is the financial objective? That's the maximization of the shareholder wealth. The financial objective is going to be the maximization of the shareholder wealth. And then what I did was I told you people that once this market and the financial goal is achieved, then ultimately the vision is also achieved. If the financial and the market goals are achieved, then ultimately what happens is the vision is also achieved. That's what we talked about. That's what we discussed. So that's what we discussed till yesterday. So if everyone is okay, then I can move forward, or else in case if you have got any questions, anything that you wish to know, so what I'm going to do is that I'm going to guide you further. Yeah, anyone having any question, please? Okay, there is a somebody is asking that you need to explain flexibility. Okay, the flexibility actually means adaptability. Flexibility actually means adaptability. Flexibility means responsiveness to change. So when we talk about the concept of flexibility, adaptability, so what we actually do is that we do discuss this thing that to be flexible would actually mean that you are adapting to the needs of the customer. To be flexible over here is you are adapting to the needs of the modern production. You are adapting to how the things should actually be done in this specific way. This is basically like how the things need to be managed with respect to the production, that is the new methods need to be followed, and etc etc. So that means you are being flexible. That's what we actually mean here. So you need to be flexible with respect to both. Yeah, anyone having any other question, please? Anyone having any other question, please? Okay, we've got certain questions. Okay. Well, the point is, there is a question that somebody is asking, uh, is the book reading mandatory? So the point is, unfortunately, you don't have much time to read the book. Yes, flexibility is to adapt to change, just like Nokia. Okay, there is also a question that a student is asking, can you explain the ownership concept in the building block model? Okay, don't worry, I'll just explain. You see, what happens is, I told you people that when you have to measure the performance, you introduce performance measures. When you have to measure the performance, you introduce the performance measures which measure an entity's performance against these 6 dimensions. Now, when you measure them against these 6 dimensions, then what actually happens is, try to understand this. What actually happens is that you need to introduce a performance measure, and your performance measure should meet these standards, which is ownership, achievability, equity. The ownership means that, for example, if you are saying that to your employee that will be measuring your financial performance using EPS, so your employee should agree that his performance is going to be measured using EPS as a performance measure. Your employee should actually agree that his performance is going to be measured using this specific measure. Okay, now, so let's move a bit forward. Okay, for the flexibility, the performance indicator would be the speed of change. Again, where there is no innovation, the flexibility and the innovation can be mixed up. Time taken to introduce new product. This could be done. This could be done. Okay, now, so what I have done is, I have given you people, you can see in the handout section, that you would find the various handouts, and amongst those handouts there is this examination question which is called film productions. It's one of the past examination question, an old question but a very relevant question, so I'll just appreciate if all of you can open up. I've also shared this in the WhatsApp group, so those of you who are actually part of the WhatsApp group can access it from there also. The question's name is film productions. The question's name is film production. Okay, Now, I'm just going to wait a bit because there is a prayer. In fact, there is an azan that's going on. So I'm just going to wait for 2 minutes. Okay, so the adhan is done. So we are now just going to resume. Let's just start off. So this is the question, the name of which is basically the name of the question is film productions. Now let's just try to have an understanding that what exactly do you mean by this specific film production? What exactly is there in this specific scenario? Let's talk, let's discuss. First of all, remember, whenever you are going to attempt any of the questions, let me repeat, if you are going to attempt any of the questions of this specific ACCA exam, so what you need to keep in mind is that, I'm repeating, what you need to keep in mind is that you read the questions requirement, you read the first paragraph of the question, go through the questions requirement one by one, and then try to read through the question again. So what the first step is, ideally speaking, you should be going through this first paragraph. Then what you should be doing is you should be going through the requirements of the question, and then the third step has to be that you have to read through the question. You have to read through the question and then attempt the questions requirement. Now, okay, now let's talk, let's discuss. It says film productions company is a small international company producing films for cinema release and also for sale on DVD or to television companies. So what they are doing is they're a small international company which is producing films for cinema release and also for sale on DVD or to television companies. They deal with all areas of the production, from casting, directing, managing the artist, to negotiating distribution deals with cinema chains and TV channels. So we are being told about this specific company, which is film production company, that these are the various things that they do. What they actually They do all of the aspects, from the casting, from the directing, managing the artist, negotiation of deals, and so on, so on, so on. Now, it says the industry is driven by the taste of its film's audience. Just like I would say that in our case, that there are at times cases when the action movies have become a hit movie. So mainly majority of the companies, what they would do is that they would try to produce the action movies. Now, if there is one of those situations where there are some more of a historical movies having a historical significance are in demand, then the developers would go for such sort of movies also. So it could actually depend upon that what is the current taste, what is the current need of the market, and according to that need, according to those needs of the market, the developers, the filmmakers would produce the films. Now, what it says is, it says the industry is driven by taste of film's audience, which when accurately predicted can lead to high levels of profitability on a successful films. Now, a very important thing. So what could happen is, if there is a successful film, it could lead to high levels of profitability. If there is a successful film, it could lead to high levels of profitability. I'm just noting down few things and then I'm going to move forward. So this is basically the first paragraph which we have gone through, and we have got a general idea about what the question is. It's about a film production company. Try to read the questions just like a story. And it actually says that it's about a film production company which is producing films for cinema and for sale on DVD and to television companies. They deal with all areas of this film production, and the type of film that they are going to develop is dependent upon the taste of the audience, which is prevalent for the time being. And if they could predict, if they could make the correct prediction, they could lead to a very successful film production. They could lead to a very successful film production. Now, what next is there? The requirements of the question. It says you are required to draft the sections of the CEO report answering the following questions. What do you need to do? You are required to draft the sections of the CEO's report. Remember, you don't have to draft the report. You don't have to draft the report. You have to draft the sections of the CEO's report. So when you are going to be answering the question, a lot of the students, what they do is that they go about with the introductory thing, which is to, from, subject, etc., etc. You don't have to go about that. You just have to draft the sections of the CEO's report. What do you need to do? You need to draft the sections of the CEO's report. That's what you have to do. Now, what next is there? The next thing is that it says, explain the difference between the two types of CSF, which are the monitoring and which are the building, using examples appropriate to film production. So there are two types of CSF, which is the monitoring and the building CSF, and the examples really appropriate to FP. Now, let's try to understand this. There are few aspects of the question which are purely theoretical, and there are few aspects of the question which are application based. So in this specific part of the question, you have been asked both type of things. First of all, you have been asked that what are the two different types of CSF, monitoring and building. That's a theoretical aspect. And then you are being told that you need to give the examples which are appropriate to FP. Now try to have an understanding, try to have a discussion. Basically, you see what happens is that when we talk about the critical success factors, I'm assuming every one of you know that a critical success factor is those things which are necessary for you to achieve your mission. So if an organization has to achieve the mission, then that means that these critical success factors are a necessity. If an organization has to achieve its mission, then that means that the critical success factors are a necessity. Now try to understand this. Basically what happens is, the two different categories of the CSF could be, one of them is called building CSF and the other one of them is termed as a monitoring CSF. Now what exactly do you mean by this building and the monitoring CSF? So if I talk about the building and the monitoring CSF, a building CSF is that CSF which focuses upon entities growth. Building CSF is something that focuses upon the entity's growth. So if there is something, if you are being told that you need to do this thing, and this is your one of the important things, so building CSF would become focuses upon the entity's growth. Like for example, in this specific scenario, which is film production company, think about how the business of this film production company could grow. You see, since it's a bit old question, but a very good question to understand, it says you are producing films for cinema release and also for sale on DVD or to television companies. Now, my question to you is, can there be any other distribution channel that could be used to sell these films? Okay, yes, there is one of the answer, which is market share. Okay, you are right, you are not wrong. So basically what happens is, if I tell you that innovation in distribution channels, like as of now we have got Netflix, which has got mobile app, which has got web application, there is an in-app downloading feature. So basically if I talk about it, generally speaking, the building CSF, those things which are going to focus upon the entity's growth, those things which would lead to entity moving ahead, they are going to be considered as your building CSF. In the case of film production company is a company which is producing films and selling them on cinema, on television, on DVD. So I've told you that digitalization, the accessibility of the films, they're all gonna be something that is focusing upon the growth or the building up of the entity. Yeah, e-platforms, internet streaming, web hosting, so on and so forth. Good enough. This is really good to see that you people are getting the concept. Now, the next thing is monitoring CSF. Monitoring CSF is those CSF that focuses upon the maintenance of an entity's position. So when you talk about the maintenance of your existing position, when you talk about maintenance of your existing status, that is going to be considered as a monitoring CSF. Now, what exactly do you mean by this monitoring CSF? Try to understand this thing. That, for example, actual results versus budget, or actual results versus the industry sales, or let's say that revenue year to year, that is also going to be considered as your monitoring CSF, because that's actually telling you that how your revenue is going to be. That's actually telling you that how your revenue is going to be. Because you see, the business has to sustain, the business has to survive, the business has to continuously generate revenue. So how is your business going to be generating revenue? That's something that's important. Yeah, is everyone okay with this? Now, let's move a bit forward and discuss further. The next requirement to the question is, it says identify the information. Identify the information that FP could use. Identify the information that FP could use to set its CSFs and explain how it could be used, giving two examples that would be appropriate to FP. So it says identify the information that FP could use to set its CSF, like how could it set its critical success factor. If you could recall when we did discuss about the critical success factor, so I told you that there are different sources of the critical success factor. Amongst the different sources, the industry in which you operate, the environment in which you are operating, the strategy that you have adopted as a business, all of that is going to be considered as something. Let me repeat, all of that is going to be something that could be the information that could be used to set your critical success factors. Now try to understand something. Basically what happens is, the other information that could be used is basically the internal and the external environment of the entity. Because you see, what are the things that we must do in order to excel at? What are the things that we must do to excel at? So you need to see your internal situation. You need to see your external situation. The external situation is your industry. That where is the industry heading towards? What is the industry actually targeting? Furthermore, the brand recognition. The second one of them is basically the brand recognition. Now, what could be the internal sources of information that could be used? So it's actually the costs incurred in the film production. Furthermore, the accuracy of the previous forecast. You see what happens is, this specific organization, what is it trying to do? This specific organization is trying to be able to achieve its objective. This specific organization is going to be trying to achieve its goal. So what are the key sources of these critical success factors? I told you that generally it's the industry, it's the environment, it's the strategy which you as an entity are operating. You have got a strategy over here, which is basically that deals with the film production, so and so, so and so. It says you need to, the industry is driven by taste of its film audience, which when accurately predicted can lead to high levels of profitability of successful films. What you need to do is that you need to keep these three in mind, and on the basis of them, you can design that what are going to be your critical success factors. Now, the next thing is for each of the two critical success factors given in the question. So there are two CSFs given in the question. It says identify two performance indicators that could support measurement of their achievement and explain why each PI is relevant to the CSF. So now, when you're reading a question like this, you need to split the question requirement into the multiple things, which is, it says there are two critical success factors. Let's say critical success factor 1. Let's say critical success factor 2. You need to identify the two performance indicator. Performance indicator 1, performance indicator 2, performance indicator 1, performance indicator 2. That means there are 4 performance indicators that need to be used. And you need to explain why each PI is relevant. Why each PI is relevant. So that is another requirement of the question which we will consider after reading the question. Next is it says discuss the implications of your chosen PIs for the design and use of company's website, its management information system and its executive information system. So this is an IT related area which I'm going to come on to. Don't worry about it. What I would want you people to do is take 5 minutes, go through this specific question and then try to answer part C, and then I'm going to start discussing. Take 5 minutes. Okay, so I hope that you people would have gone through the question now. So let's just start discussing it. Let's just start going through it. First of all, it says the company's stated mission is to produce fantastic films that have mass appeal. So a very important thing is to understand that what an organization's mission is. So the mission of this organization is to produce fantastic films that have got mass appeal. This is considered to be the mission of the organization. It says the company makes around 200 million of sales each year, equally split between a share of cinema takings, DVD sales, and TV rights. So approximately, if you talk about it, so it's approximately 67 million sales for each one of them. FPI released 32 films in the past 5 years. If I talk about this 200 million divided by 32, so this is actually going to make it what? Right? No. 200 divided by this 32 films is over the past 5 years. So when you've got 32 divided by 5, this makes it what? This is 32 divided by 5 gives you 6.4. So it's actually going to be 6.4 films a year. 200 million is the sales of each year. So hence 31.25 million is the sales that you are making from each film. Each film costs an average of 18 million. The cost of each film is around 18 million and takes 12 months to produce from initial commissioning through to the final version. So as of now, the profitability on each film is 13.25 million. It says production control is important. Production control is important to hit certain key holiday periods. Like for example, you have got a Christmas coming in, or you have got an Eid holidays coming in, etc., or any XYZ holidays coming in. So you're targeting the films to be released on those XYZ holiday periods. For releasing films at the cinema or on DVD. Now, companies' films have been moderately successful in winning industry awards. Although FP has never won any major award like Oscar, so they may not have won any Oscars, but it aims to have been primarily commercial with artistic considerations secondary. Like for example, the film producers, what they wonder is they are like, okay, it's okay that we don't win awards, it's okay, but what matters to us is the profit. We don't want to go into key artists. We don't want to hire the key artist, a very renowned artist, a very well-known artist, and end up paying too much, and ultimately we may not be successful. So their focus, their objective has majorly been what? Their focus, their objective has majorly been that they have tried to produce the film which are going to pay them off commercially, but they should not necessarily be having any artistic considerations. Is that okay to everyone? Okay, now it says the company uses top-down approach to strategy development with objectives leading to the critical success factors. So you do know that this is what they are adopting is strategy, the objectives, and the CSF, which then must be measured using the performance indicators. So you will have the performance indicators here. Currently, the company has identified a number of CSF. The two most important of them are as follows. Number one of them is improve audience satisfaction. The second is strengthen the profitability in operations. Now, it says at the request of the board, the CEO has been reviewing this system, in particular, the role of CSFs. Generally, CEO is worried that the ones chosen so far fails to capture all factors affecting the business and wants to understand all possible sources of CSF. So we do know the all possible sources of CSF. We did a study yesterday also, which is industry, which is the environment, which is the strategy, which is the temporal factors, and what it means to categorize them into monitoring and building. We've already studied that. Now, it says this CSF will need to be measured and there must be systems in place to perform that role. So in order to measure this CSF, like in order to have the KPIs, there has to be a system in place to perform that role. It says the existing information system is based on a fairly basic accounting package. However, the CEO has been considering greater investment in these systems and making more use of company's website and driving forward the business links to its audience and in collecting data on them. It says CEO is planning a report to the board of film production and will ask you to help by drafting certain sections of this report. Now, let's try to have an understanding. We have already gone through part A of the question, part B of the question. We have already gone through that. We have already discussed about the monitoring building CSF. We have already discussed about how the critical success factors could be set. Now, these two are the important things that need to be done. So we are now going to talk about these. Can you just read the requirement again, please? Okay, so the requirement to the question is that you have to suggest two performance indicators for each of these two critical success factors. Now let's try to have a discussion. One of them is improve audience satisfaction. And the other one of them is strengthen profitability in operations. So we need to tell them about two KPIs at least in each one of them, and we need to explain the reasons for that. So I would want you people that can you just tell me that what is it going to be that you will use in order to measure whether the audience satisfaction has increased or not? How would you measure it? Yeah, I need your suggestions, please. Be active. I need your suggestion, please. Quick. now perfect. Good. This is really good to see. I'm really happy to see the way you are participating. Now, if we could just look at it, the different type of suggestions that you people have given, this includes what? The audience satisfaction could be the sales, the audience satisfaction could be the sales, the audience satisfaction could be the awards won, the audience satisfaction could be the TRPs, the television TRP ratings, and this number of views in the modern day, number of views. The fifth one of them is basically the great number of houseful shows. Okay, movie rating on charts. Houseful, so on. Okay, this is really good. I'm sorry, I'm not taking out name of each and every student, but I am really happy to see the way you people have contributed. It actually goes to show that you people have the understanding. This is extraordinary. Number of times the film have been viewed, played. Okay, this is covered by views. Now let's try to have an understanding. Basically, the question is asking us two things. It tells us that you need to tell us that what should be the performance indicators and why they're relevant. So if the sales indicates the number of times it is subscribed/purchased, and this is based on voting and an indicator of admiration from people. TRP ratings, they are the external measure. The number of views, it's something that actually only happens if people are happy. The houseful cinemas only if it's successful. So you could actually see this thing that that these are the things which are going to be the indicators of whether the audience satisfaction is there or not. Now, the second thing is about the strengthening of the profitability in operations. Now you people are wonderful. The way you are participating, the way you are communicating, it's really good to see. I would really appreciate now your suggestions on this. Please go ahead. Okay, great, excellent. The way you are participating, this is really good. So one of the performance indicator is going to be the profit per film. We have already calculated the existing profit. The second thing is variance on budgetary expenditures. Okay, a lot of you people are saying time taken to produce the film. That is okay. That is okay. That is okay. Not an issue. Okay. Margin comparison with industry. Margin comparison with industry. Now try to understand this. Your CSF should be aligned with your mission because you want to produce fantastic films that has got high demand. This indicates how well cost, how well it has been predicted. The variance on budgetary expansion, the budgetary expenditure, so it tells us how cost control have been successful. The margin compared with industry tells you the market position and identifies areas of improvement That's what it does. It tells you this thing and it identifies the areas of improvement. Great. So now what we have done is we have done this part of the question also. And I'm sorry to those who have given suggestions but I have not considered them because obviously I cannot consider everything. It's gonna then make my answers very, very long. So but if there is somebody who is giving a wrong suggestion, I'm gonna highlight. So you keep on suggesting. If somebody who's gonna give the wrong suggestions, I'm going to highlight that. Don't worry. Okay, let's move a bit forward and let's talk about the next question. It says discuss the implications. When it says the implications, so it means impact. Implications, it means impact. Discuss the implications of your chosen performance indicators for the design and use of company's website, its management information system, and its executive information system. Now, there are three requirements in this specific question that needs to be covered up. Now, let's try to have an understanding. First of all, you should be able to understand what an information system is. Okay, Mazari, you are saying that the question has asked for two performance indicators for each. Why have you mentioned so many? So it's just that you people mentioned so many. So I picked up reasons so that it could actually be giving you a variety. You just have to write two each in the exam. That's it. Okay, now let's move forward. Let's discuss further. Okay, let's move. So the next thing that we need to understand is actually the concept of, the next thing that we need to understand is concept of information system. A lot of people, they mix up IT and IS. A lot of people, what they do is that they mix up IT and the IS. Please try to understand this thing, that there are two different things. IT and IS are two different things. IT is information technology and the IS is the information system. Information system is basically what information is generated, how is it captured, how it is recorded, then how is it processed, and how is it used. So the information system actually tells you how your information which is generated, how your information which is basically produced is captured and flows across the organization. That's what the information system is. Whereas IT is something else. Now, the information systems could be of different types. The information systems could be of different types. They could actually be a TPS, transaction processing system. They could be the MIS. They could be the EIS. There could be different types of information system. Now, what exactly do you mean by this information system? So this is basically transaction processing system. There is this management information system. Then you have got executive information system. Then you've got executive information system. Now let's try to have an understanding about all of this. Basically what happens is, if you look at any organization, you would see that there are three different levels within an organization. This is a strategic level, this is a tactical level, this is the operational level. So obviously the information needs of this level, the information needs of this level, information needs of this level, they all are different. With respect to the operational level, they need detailed information. They need detailed information. They need the minute details. The tactical level, which is actually your middle level management, they need a bit summarized information. They need a bit summarized information. And then what happens is, you have got a strategic level management. They need a highly summarized information. They need highly summarized information. Now, so because obviously the executive level management, they don't have the time. They don't have the time. They need information which is very summarized. Okay, yes, there is a decision support system also. You're right. Now, let me demonstrate to you people how these information system actually operates. I mean, I am going to guide you about these information system through an example. For example, I'm just telling you that this is basically, let's say, this is details, this is classification, this is, let's say, amount. Okay. Okay, name, details, classification, amount. For example, I'm trying to create a data. I create a data like this: A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, etc. We are trying to produce okay. Now let's assume that we're trying to say that this is tuition fee for paper, let's say FM, for paper AFM, for paper APM, for a paper SBR, for paper AAA, for paper ATX, for paper, let's say PM. Okay. This is, let's say, tuition fee. This is exam fee. This is tuition fee. This is tuition fee. This is tuition fee. This is exam fee. This is tuition fee. This is exam fee, etc., etc., etc. Okay, I'm just doing it just for the sake of explaining, for helping you people understand that what exactly are these different types of systems are. Now let's say I say it's $120, it's $150, it's $130, it's $200, it's $145, and so on and so forth. Like for example, if I say this is 1.03, this is into 1.08, this is this into 0.95, this is this into 1.1, and so on and so forth. If I keep on, let's say, if I keep on creating the data, and this is the data that is being created. Okay. Now, try to understand this thing. I've tried to record the data of various students of an institution. Now, unfortunately, this data is not going to lead me towards anywhere. I cannot tell you that what is basically the information, how many financial management students have registered, how many financial management students have registered, how many AFM students have registered, etc., etc., etc. Now, so what am I going to do? Let's try to understand this thing. What am I going to do is that I'm going to create a pivot table. I'm going to create a pivot table. Now, this pivot table, see here, I would say insert a pivot table. Yeah, here, this is what it is. Okay. Then I would say I need details, I need the classification, I need the amount, and I need the name. Okay, now try to understand this thing. Okay, now see what happens is, let's try to have an understanding. Okay, now you see, this is an information that has been generated. This is an information that has been generated. Now, if this information has been generated, so if I say that I need a report which tells me that what is the exam fee that has been collected, what is the tuition fee that has been collected. So this specific report is going to be considered as a report which is being generated for the executive information system. This is probably going to be a report which is being generated for the executive information system. I mean, there could be different types of reports that could be generated. One of them is this report. Now let's talk about another report. I would say let's classify also. Let's classify also the information. So when you have classified the information, this is another type of report that has been generated. Now let's move a bit forward. Let's move them a bit differently. Okay, this is another type of report. Now the last report that I'm going to generate is, okay, even I'll not be able to capture the entire report anyways. Okay, let me ask you people a question. You have got these different types of report. You've got these different types of report. These could be classified as the report which is relevant for the strategic level, for the tactical level, for the operational level. Can you just tell me that which one of them is for which level? This one, which level is it? Okay, I'll mark it like this. This is report 1, this is report 2, this is report 3, this is report 4. Now let's just tell me that which report is for which type of information. Yeah, quickly. I need participation from all. I've actually taught you two things here. One of them is the information system. Secondly, I've told you how to generate a pivot table. You have seen the pivot table. You have, if somebody hasn't used the pivot table earlier, you have actually learned the pivot table today. Okay, now let's see. Okay, good enough. It's good to see that you people have understood. A lot of you have understood. See, this is the information. This is an executive information system. This is an executive information system. This is basically for the strategic level. Our executive information system would generate reports like this. This is for the tactical level. This is for the tactical level. A management information system would generate a report like this. It's detailed, but it's not very detailed. But here it's an operational level detail where you need to know every single detail, every minute detail. This is the operation level detail. This is operational level detail. Are you getting it now? Yeah, are you getting it now? Okay, great. So you would thank me for two things. One of them is I told you people how to generate how to generate this pivot table and how to use this various types of reports and so on and so forth. So it's actually like this. The way you want to generate the report, you'll have the report that way. You want this, you can have this, you can do this. So Excel is one of the examples of a management information system. It's one of those systems that actually has got the characteristic of producing different types of reports. So anyways, now try to understand something. Practically what happens is that in modern day, the ERPs, the enterprise resource planning softwares, they have got the feature of everything. They can generate MIS level report. They can act as an EIS, they can act as a TPS, they can give you minute test of details, it can act as a DSS also. So this is what it is. Now let's move a bit forward and discuss further. The requirement of this specific question, is that it tells us that you need to discuss the implications of your chosen performance indicators for the design and use of the company's website, its management information system, and its executive information system. Now, let's have an understanding. What is it going to happen? Now, see, basically, when we talk about the use of website, see, try to understand. When we talk about the use of website, so what actually happens is when we talk about the use of the website, it's actually like this. Just think about it. Your website, you are a film producing company. Your website could be used for many purposes. Your website could be used for posting trailers. Your website could be used for posting the upcoming videos, for promoting the cast, for promoting the film, for promoting the story. Your website can be used for collecting reviews. Your website could be used for many purposes. You getting it? Your website can be used for many purposes. Now, so basically what happens is, these performance indicators, which we have introduced, which we have discussed over here, which were like sales, awards won, etc. So the audience satisfaction could be captured using the survey, reviews, monitoring the views of various clips, various scenes, various things, the audience preferences. When you've got your old films on the website, those old films can actually tell you that what are the audience preferences. You could even use it as a sales platform for online viewing. So there are many things that could be done with respect to how the website could be used. Second thing is, it says what are going to be the implications on your MIS. You see, the current system, we are being told that the current information system is the basic accounting package. So the basic accounting package has got limitations. It cannot produce information. It cannot produce detail. So the implications on your EIMIS is going to be it will provide details. It would provide details of what cost incurred. It would provide details of the sales revenue generated. It would help you in the profitability analysis of your films also. So your management information system is going to be helping you out gathering the cost data, gathering the profit data, gathering the sales data, the sources of sales, etc., etc. You could summarize the information in many ways, just like I told you here, just like I told you here by drawing a pivot table, just like I told you here by drawing a pivot table. Yeah, so you could generate many reports. You could generate many reports. You see the reports that we produce over here for the different levels of management, the strategic level, the tactical level management, the operational level. You can bifurcate it to whatever level you want to. Okay. Similarly, your executive information system, it could be again used for producing information for the senior management, reporting on the profitability, reporting upon the key indicators that the management is going to be interested in. So your management information system, your executive information system, they would now be capturing the information which is going to be matter, which is going to matter to the management. Yes, MIS can be used to forecast sales. Yes, it can be used. You can use it to forecast sales numbers. Yeah, is everyone okay with this? Are you people able to understand this question now? Is it clear now? Are you people able to understand this question, please? Okay, this is great now. So anyone else having any questions on this? Is this question okay to you people? Are you people able to get the way the questions are examined and the way the questions have to be answered? Okay, great. Now, so we are now going to have a break for prayers, and we are going to start off in the next 15 minutes. We're going to start off in the next 15 minutes. This day two, PQ Film Productions. So we'll have prayer break. Till 6 p.m. Okay, so welcome back. We are now going to move a bit forward and discuss further. So you have got the handouts with you. The next question that I'll be discussing is basically the name of the question is this Fairtees company? The name of this question is Fairtees company. This is the next question that we will be discussing. The name of it is Fairtees company. Now, let's just start discussing about this Fairtees company. Fairtees. You already have got the questions. You already have the question with you people. And for those of you who are unable to find the question, there is a handout section in this webinar window. You could find the questions over there. There's a handout section. You could find the question there. I've also shared this question on the WhatsApp group so that you can access it. If you wish to access on the WhatsApp, it's available on the WhatsApp also. Okay, now let's talk. Again, a question which is a long question. What we would be doing is we would be going through the question in the same manner as I told you earlier, which is we'll be going through the first paragraph, and then after going through the first paragraph, we'll go through the requirements of the questions. So the first paragraph, the Fairtees company background, it says Fairtees Security is a business owned and run by Fairtees family, which provides security personnel for other businesses. Example, factory guards, security staff at large public events, for example, music concerts, and so on and so forth. Now, okay, so now it says Fairtees Security is a business owned and run by the Fairtees family, which provides security personnel for other businesses. Example, factory guards and security staff at large public events and so on. The business has grown along with market for outsourcing of security personnel roles, and Fairtees is one of the largest of such service providers in B land. So there is this country which is B land. It's basically one of those markets where the outsourcing has increased a lot. It says Fairtees family has always managed the business to increase profits without excessive risk taking. So you see how the management has operated. They have always managed the business to increase profits without excessive risk taking. So they are probably a risk averse type of a management. Most of the family are financially dependent on businesses though through their pay and dividend. So it's actually a family owned business. So they get the salaries, they get the dividends from this business. So it's not something of an investment, it's something that is bread and butter. It says the founder of the business was an accountant, and it has become a family tradition that the chief executive officer would always have an accounting background. So the CEOs always have had an accounting background. It says as a result, the performance reporting has always focused on financial results. As a result, the performance reporting has always focused on financial results. Now, what next is there? It says recent events. We'll talk about the recent events, but let's actually have a discussion. It says write a report to the board of Fairtees. You have to actually write a report. And when you actually have to write a report, that means there are going to be certain number of marks which are going to be there for the report writing and so on and so forth. You have to write a report to the board of fairtees to respond to the chief executive officer's request for work on the existing key performance indicators and the introduction of the balance scorecard. So this organization wishes to introduce the balance scorecard. So obviously, if you are going to be introducing balance scorecard, you would have to work on the KPIs also. So that's something that's going to be talked about in this question. Evaluate the problems associated with measuring and managing performance using non-financial performance indicator at fairtees using customer survey as an illustration. So you would have to use the customer survey as an illustration, and you would have to discuss that why there are problems associated with measuring and managing the performance using these non-financial performance indicators. The third one of them is, it says using Hopwood's styles. So there is actually a theorist who has suggested the different styles of management which we are going to be discussing. Using Hopwood's styles, assess the existing management style at fairtees and recommend an appropriate approach. Using Hopwood's styles, assess the existing management style at fairtees and recommend an appropriate approach. Then it says advise fairtees on the management setting of targets and how they should be used in the appraisal system. So there is something which is pertaining to the HR area. There is something which is pertaining to the management styles. So we are going to discuss these parts also. But first of all, the first two parts are majorly focused upon the things that we have actually already studied. So now let's start discussing this specific scenario. I would recommend you people to go through the question for 2-3 minutes, and then we are going to start discussing. So take 2-3 minutes, and then we are going to start discussing. Okay, so let's talk. I hope that you would have gone through the question by now. Okay, let's just see. It says a new generation of the family has risen to the power. Always happens with every family business. A new generation has risen to the power. And what is actually happening is, it says that with the goal of increasing the growth by expanding Fairde's operations into different countries. So they're going into the different countries using its existing reputation for reliability. The newly appointed chief executive has recognized that the choice of KPIs may not be suited to the current business environment where the company is facing various issues. Changing government regulation with most customers facing Fairde's staff now required to hold a certificate showing they are aware of the relevant laws and health and safety procedures regarding their duties. Indeed, this factor is the reason for the growth of outsourcing of to Fairde's. The difficulty in recruitment and retention as the pay for the customer facing staff is low by Beeland's standards. Even though Fairde's provide full training for them. Legal difficulties arising from claims of Fairde's staff being too aggressive in the pursuit of their duties. So there are three problems which are arising with respect to them. The three problems that are arising for them. Now, what happens is, it says the CEO has asked you to prepare a report to the board on the following performance management matters for Fairde's and has provided you with the information in Appendix 1 and Appendix 2, which may help you with the first two tasks. So the first two tasks, you need to use the information which is available in Appendix 1 and Appendix 2. Now, what is that? Let's try to have an understanding. It says the existing KPIs and introduction of the balanced scorecard, existing KPIs and the introduction of the balanced scorecard. It says CEO is considering. It says CEO is considering the introduction of a balanced scorecard approach and wants an evaluation of whether the existing key performance indicators cover the financial perspectives for the board. So what does she want? She wants that she's considering the introduction of the balanced scorecard and wants an evaluation of whether the existing key performance indicator will cover the financial perspective for the board. It says she has provided you with a draft copy of the most recent board meeting to illustrate current reporting. The draft has been prepared quickly by a junior accountant, and the CEO believes that there is an error in the ROCE calculation, which you should correct. She then requires reasoned recommendations for the two indicators within each of the remaining three perspectives: the customer, the internal business, and the innovation and learning. These indicators should address the issues facing the business. It says use of customer surveys. In the past, board has resisted the introduction of customer surveys due to worries about the ability to measure performance using this method. So what I'm going to do is that it says the CEO is aware of the many new indicators from the introduction of balanced scorecard are likely to be non-financial. Therefore, she has asked you to evaluate for the board the problems associated with managing and measuring performance using so and so, so and so. We're going to cover it up later on. This is also going to cover up part C. This is going to cover up part D. This is for part B. Let's talk about Appendix 1. We have been provided revenue, we have been provided operating profit, we have been provided the cash flow from operating activities, the dividends, and the ROCE. If I move forward, the next thing is it says other information. So with respect to the other information, we have been provided more details. Revenue, operating profit, profit after tax. Then there is this assets and liabilities, the equity. There's this dividend history that's being provided. So now, what exactly is the requirement to this specific question? It says respond to the Chief Executive Officer's request for the work on the existing KPIs and introduction of the balanced scorecard. Now, let's go back to the requirement mentioned in the question. It says existing, the CEO is considering introduction of balanced scorecard and wants to evaluate whether the existing KPI cover the financial perspective for the board. So first of all, the requirement A is about the introduction of the balanced scorecard. The requirement 1 is about the introduction of the balanced scorecard. The second requirement here is about second is you need to cover whether the existing KPIs cover the financial perspective or not. Now, it says the draft has been prepared quickly by a junior accountant and so on and so forth. So the return on capital employed calculation which you should correct and so on and so on. Now, let's discuss. See, this is a very important question for you to be able to understand how the balanced scorecard would be applicable in this specific scenario. This is a very important question for you to be able to understand that how the balanced scorecard would be applicable. Now, let's try to understand this. First of all, you do know that if the entity has to introduce the balanced scorecard, then you need to have the objectives under each of the perspective, which is the financial perspective, the customer perspective, the learning and growth perspective, and the internal business process. Now, if I talk about the general thing, I mean, basically, I am just going to mark down the things which should be achieved from the financial perspective, from the customer's perspective, from the learning and growth perspective, and so on and so on. So you see, if you could just go back, it says the business is being managed by the family and they've been able to increase profit without excessive risk taking. So the objective here is they need to increase the profits without taking excessive risk. They need to increase the profits without taking excessive risk. They are dependent on pays, they are dependent on dividends for their bread and butter. The next thing is there are various problems that are being faced. Changing government regulation with most customers facing Fairtees staff. Now required. What is this? Facing Fairtees staff now required to hold a certificate showing they are aware of the relevant laws and health and safety procedure regarding their duties. Indeed, this factor is the reason of the growth of outsourcing to Fairtees. So if this is one of those features which is the reason for the outsourcing, so you would actually mark it out in the learning and growth perspective that basically the awareness of law, health and safety regulations. That's an important thing that needs to be kept in mind. Now what next is there? It says difficulty in recruitment and retention as the pay for customer facing staff is low by Beeline standards, even though Fairtees provide full training for them. So you see, this is going to be something which is going to be key because the customers are frequently asking. So that means the internal business perspective would be that employee retention and recruitment. Now, it says legal difficulties arising from the claims of Fairtees staff being too aggressive in pursuit of their duties. Again, it's something that you must excel at. So the legal issues avoided. Now, see, this organization wishes to introduce the balance scorecard. I'm repeating, this organization wishes to introduce the balance scorecard, and what the examiner has asked you is that it says response to CEO. What is the CEO asking you? The CEO is telling you, I want to introduce balance scorecard. What I want you to tell me is that are the existing KPI covering the financial perspective or not? Number two, you need to tell us two indicators for each of the remaining three perspectives, which is the customer, internal business process, and innovation and learning. Now let's try to understand. First of all, if I talk about the financial perspective. Let's just have a look at this question. The key performance indicators that are being used are these. The key performance indicators that are being used are these. Now let's have an understanding. Basically, your financial goal is to have profits without taking excessive risk. What do you need to do? You need to have managed to increase profits. Increase profits means you need to grow the profits. So basically, the revenue is an indicator of ultimately having a profit. Okay, operating profit is good. The cash flow from operating activities, okay. The dividends paid because they are dependent on dividends, ROC. Now, see, if you as a management is focused upon the growth of profit without risks, so a better approach is going to be when you would have a percentage change reported to the management also. A better approach is going to be when you will have a percentage change reflected to the management also. Why? Because we are interested in growing the profit without risk. This means 4.097 or 4.1%. Then you have got the operating profit. If I could talk about the operating profit growth, I could say it's going to be 5.88%. I could even calculate the operating profit margin over here. So it's going to be 5.16%. And it's going to be 5.24% here. The cash flow from operating activities, there is no change. The dividends that have been paid, they've increased by 7.7%. And then there is this ROC. So now see, ideally speaking, what you are going to be writing down to the examiner is going to be that what should have happened is that instead of only mentioning numbers, it would have been better had the comparisons be made about the numbers. So if it would have been the case like this, that instead of just mentioning the numbers, just mentioning the things in absolute terms, it would have been greater, it would have been better had the comparison been made about the numbers. The revenue is an important indicator as it leads, it shows growth of business. Then you would say that the operating profit is better understood if it is computed as operating profit margin, as margin indicates growth in relative profit. Fourth one of them is dividend growth rate would have been better rather than about dividends paid. Family owned business with not much capital involved. Hence, ROCE is not an appropriate measure. So you see, what the examiner has done is he has asked us how exactly would you be, I mean, like if the business is going to be growing, if whatever the forward thinking is there, whatever, whether we'll be implementing the balance scorecard, so you need to tell us that whether the current KPIs are appropriate or not. Whether the current KPIs are appropriate or not. Yeah, is everyone okay with this? Are you able to understand that how are we going to answer the question? Okay, it's a security company. It's a security company. So a security company would not have much of the capital invested. It's reliant upon, it's dependent upon humans. Because it's not a capital intensive business. It's not a capital intensive business. Furthermore, you would do one more thing, which is going to be, you would perform the revised calculations of ROCE. That what is the current ROCE, the correct formula. What's the correct formula for the ROCE? Is that okay to everyone? Now, what we need to do now is that we need to go about and we need to now move a bit forward. We now need to move forward and discuss the other aspects, which is going to be that the other aspects of the balance scorecard, which is going to be the customer, which is going to be the internal business perspective and the learning and growth. So let's talk about them and let's try to introduce few KPIs. Now, if I talk about this customer, so the customer survey results could be the appropriate measurement of the satisfaction levels of the customers. So basically, if the customers are okay, if the customers are happy with the way the service is being provided by us, so that is probably going to be available through what? Now, so you've got the customer survey results. These could be used. What else? What else? What else is the customer wanting us to do? Okay. It could be the customer retention. It could be the customer retention rates. It could be the growth in the number of customers. This could also be an indicator of whether the existing customers are happy or not. Let's move a bit forward, discuss further. It's about the next thing is about the internal business process. I told you a few things about it. There's awareness of law, health, safety regulations. There's basically awareness of law, health, safety regulation that's important. Secondly, the business wants to increase profits. Sorry, the recruitment and retention, the legal issues. So the operating profit margin achieved over time. The second thing is number of times legal issues / notices have been served. You could also calculate the employee retention rate. All of these are going to be the internal business perspectives. These are the things that this business must excel at because these are the major issues that are presently being faced. Then with respect to the learning and growth, so number of training hours. Second thing is number of times staff have been fined for the lack of knowledge on laws and regulations. Yeah, can you suggest one more for the learning and growth? Number of staff trained, okay. Number of staff trained. Number of staff trained. Okay, what else? Okay, yes, training cost per employee. Yes, that's also important. Okay. Number of customer complaints. This is very good. This is good. Can you suggest more, please? Okay, great. So what we have been able to do till now is basically that we have been able to introduce the various performance measures. We have been able to evaluate that whether the existing measures are sufficient enough for the financial or not. Now let's move a bit forward. Let's discuss further. Now the next thing is the requirement of the question, which says evaluate the problems associated with the measuring and the managing of performance using non-financial performance indicators at Fairtees using customer surveys as an illustration. Now, so let's try to understand this thing, that you see, whenever you've got the non-financial performance indicators, there are certain issues that actually arise with any non-financial performance indicators, which is what to measure. The second thing is how to measure. The third thing is how to interpret results. Now, if we talk about the customer surveys, if we talk about the customer surveys as an illustration, so now let's just try to see what happens with the customer surveys. How does this organization goes about? Board has resisted introduction due to worries about ability to measure using this method. CEO is aware of that many of the new indicators from the introduction of balanced scorecard are likely to be non-financial. She has asked you to evaluate for the board the problems associated with measuring and managing performance. Now, see what happens is the problems in measuring them is the customer survey is the first of all satisfaction level. It is judgmental. Every customer would have a different satisfaction level. Few of the customers would say good to everything. Few of the customers would say poor to everything. Few of the customers would say excellent to everything. So there is a judgment involved. The second thing is at times we give them ratings that like 0, 1, 2, 3, 4, 5. So maybe they could misinterpret it. Maybe this is too much judgment involved. It could actually even depend upon the moods and the memories of the customers also. Because you see, I recently had a bad thing, so I would review bad. Maybe the entity might have been providing a very good service for the last many years, but I recently had a bad experience. So I would actually only remember the latest experience. I would not be remembering the whole of it. So you see what happens is when it comes to the introduction of the non-financial performance indicators, it's a very important thing what to measure, how to interpret results. And especially when it comes to customer service, there are many other things involved, judgments, the misinterpretation, the subjectivity, and the customer's opinion, individual opinions. There are many things that need to be considered. So you could use the word subjectivity. You could use the word judgmental. You could use the word It's actually like at times you can have cultural issues involved also. You would come across a family where nobody would ever talk in a high tone, and you would come across a family where everybody talks in a very high tone. So if you are coming from a family where everybody talks in a very high tone, and if somebody speaks to you in a mild manner, so you would be like that this person is very nice. If somebody if somebody is coming from if somebody is coming from a family where everybody speaks at a very high tone, very small, very slow tone, and if he or she comes across somebody talking to them at a very high tone, it would be very difficult for that person to manage things. Is that okay to you people? Okay, this is great now. So what I'm going to do is that I'm just going to keep it till here today. We will attempt the remaining requirements of this question tomorrow. I'm not going to miss them out. But what I'll do is that I'll keep today's class till here. So before we leave, I would have, just like you people gave a feedback yesterday, I would like to have your feedbacks for today. Any questions that you may have, any inputs, any suggestions, anything that you would wish to comment on, because I think we have attempted 2 of the questions, and I believe that there must be some sort of insights that you would have gotten into with respect to the subject. So would really appreciate your feedback. Ramesh Qureshi, thank you very much for your suggestion. Yes, I'll incorporate the marking scheme discussion from tomorrow. Okay, Asad, thank you. Stanley, yes, Stanley, you'll get the answers and the working in the WhatsApp group. Don't worry. Sajid, thank you very much. Mazali, yes, I try to cover maximum things. Don't worry. I will not just end it till this webinar. You will get continuous support, inshallah, to the best of my abilities. Okay, anyone else? Any other feedback? Thank you, Stanley. Yeah, anyone else who would wish to comment, please? Thank you, Maj. Okay. Okay then. Thank you very much, everyone. Thank you for your time. Thank you for attending the session. It was really good to have you people here. Let's meet up tomorrow. Inshallah, we will have another fruitful, fruitful session for tomorrow. So let's actually hope, and let's actually hope for a good session tomorrow also, inshallah. So thank you very much, everyone. Thank you very much for your time. Thank you for attending the session. Yes, don't worry. I will tell you about the answer drafting techniques also. Thank you. Allah Hafiz.